The volatile short-term rise and fall of stock markets is ignored by long-term investors. Instead of being sucked into the drama, they invest in shares of dependable businesses with consistent performance over years or even decades. Investors should think about investing heavily in stable growth opportunities that will offer them long-term safety and security as a way to get ready for the upcoming difficult months. The finest long-term investments are equities of expanding companies that offer consistent profits. In this video, we will discuss 10 stocks that could be the best for long-term investing. Hold on, this is not a financial advice. The video is made for educational purposes, so let's learn. Number 1. Apple Inc., NASDAQ AAPL. Technology business Apple Inc. has a wide range of products, with IT companies moving toward metaverse concepts, autonomous driving, virtual reality, and artificial intelligence. Apple is positioned to be a major participant in the developing market for years to come. Considering the long-term promise of a virtual reality technology that's supposed to be released next year, Morgan Stanley analyst Katie Huberty lately increased the price target on Apple Inc. stock from $200 from $164 and held an overweight rating on the shares. 120 hedge funds had positions in Apple Inc. at the end of the third quarter of 2021, compared to 138 with $146 billion positions the quarter before. Asset management company Distillate Capital highlighted a few equities in its Q1 2021 investor letter, and Apple Inc. was among them. Number 2. Berkshire Hathaway Inc., a conglomerate having holdings in the insurance, railroad, and consumer products industries is Berkshire Hathaway Inc. In recent decades, the Warren Buffett-led business has offered investors strong returns and consistent growth, and this pattern seems certain to hold for the foreseeable future. Early in November, Berkshire Hathaway Inc. released its earnings outcome for the third quarter, revealing that it had purchased $7.6 billion worth of shares during that period, adding significantly to the more than $12 billion it had done in the first half of the year. This brought the company's cash reserves to about $149 billion. By the end of the third quarter of 2021, 106 hedge funds had interest in Berkshire Hathaway Inc., worth $19 billion, down from 116 the quarter before, with stakes totaling $22 billion. Asset management company Voltava Fund highlighted a few equities in its Q1 2021 investor letter, and Berkshire Hathaway Inc. was among them. Number 3. NVIDIA Corporation, NASDAQ NVDA. Visual computer company NVIDIA Corporation operates. It's one of the top chip manufacturers in the U.S. Government funding in NVIDIA may increase significantly over the next few years as a result of plans to reduce reliance on Chinese chip manufacturers. The stock of NVIDIA Corporation received a mini boost in November when the company topped market expectations for third quarter sales and profits per share thanks to growth in the data center and gaming industries. By the end of the third quarter of 2021, 83 hedge funds had positions in NVIDIA Corporation worth $10 billion, down from 86 funds with $9 billion stakes the quarter before. Asset management company Vulcan Value Partners highlighted a few equities in its investor letter for the first quarter of 2021, and NVIDIA Corporation was among them. According to their report, NVIDIA reported excellent results and its value has compounded rapidly. The technology sell-off at the beginning of the year negatively affected the stock price, while our estimate of NVIDIA's value per share increased. This happy combination of events created a margin of safety and an opportunity to once again add NVIDIA to the portfolio. Number 4. AT&T Inc., NYSE T. Technology and telecommunication company AT&T Inc., the services provided by wireless broadband providers like AT&T in the upcoming 10 years will be a major factor in the global implementation of 5G networks and the business that will be produced as a consequence. AT&T Inc. stock gets a buy rating from Citi analyst Michael Rollins, and his high price target is $29. AT&T's chief financial officer, Pascal Desroches, recently stated that the company's expansion was sustainable and that consumer demand for the services it provided remained strong moving into 2022. By the end of the third quarter of 2021, 66 hedge funds had interest in AT&T Inc., worth $3.2 billion, compared to 68 the quarter before for $2.8 billion. Asset management company Nelson Capital Management highlighted a few equities in its investor letter for the first quarter of 2021, and AT&T Inc. was among them. Number 5. Tesla Inc., NASDAQ TSLA. Electric vehicles and sustainable energy equipment are produced and sold by Tesla Inc. It has already made a major name for itself as the premier EV company worldwide. One of the major winners from this expansion will be Tesla when the market for EVs surpasses $5 trillion. The stock price target for Tesla Inc. was recently increased to $1,580 from $1,298, and analyst Pierre Ferragu reaffirmed a buy rating, expecting the company to produce over 280,000 EVs in the fourth quarter. Tesla Inc. said on December 8 that it had sold 52,859 vehicles in November that were built in China, down 3% from the previous month, but up more than 340% from the previous year. The company reported exporting 21,127 automobiles built in China in November. 60 hedge funds in Insider Monkey's database owned interest in Tesla Inc. at the end of the third quarter of 2021 for $10 billion. The same as they did at the end of the second quarter for $9 billion. In its investor letter for Q1 2021, Barron Partners Fund stated that we anticipate strong growth and improved margins driven by new production capacity, manufacturing efficiencies, localization of its manufacturing and supply chain, and maturation of Tesla's full self-driving technology. Number 6. Oracle Corporation, NYSE ORCL. Enterprise clients can purchase software solutions from Oracle Corporation. Oracle already has long-term growth effort in the works that investors should keep an eye on over the next 10 years. Oracle has ambitions to expand cloud capabilities to 14 additional locations across the world. Oracle Corporation analyst J. Derek Wood lately increased the price target on the stock to $115 from $96 and reaffirmed an outperform rating on the shares, adding that the company would experience an escalation of sustainable growth in the near future. By the end of the third quarter of 2021, 56 hedge funds in the Insider Monkey database had holdings in Oracle Corporation, NYSE ORCL, totaling $3.4 billion, up from 55 at the end of the second quarter, with interests worth $2.8 billion. Today, elite investors are paying close attention to Oracle Corporation, NYSE ORCL, along with other promising stocks. Number 7. Varonis Systems Inc., NASDAQ VRNS. The company Varonis Systems Inc. sells and offers software. Since cybersecurity, a product that Varonis Systems specializes in, will be one of the primary areas of spending for businesses over the next 5 years, the company is expected to expand. On November 1, Varonis Systems Inc. released financial results for the third quarter, announcing profits per share of 5 cents, surpassing projections by 3 cents. The period's revenue increased by 30% from the year prior to $100 million. With 1.2 million shares valued at more than $75 million, the Massachusetts-based company Matrix Capital Management is a significant stakeholder in Varonis Systems Inc. Number 8. Lattice Semiconductor Corporation, NASDAQ LSCC. A company that makes semiconductors is Lattice Semiconductor Corporation. This year's pricing volatility and inflation causing supply chain interruptions have made it clearly evident how crucial chip manufacturers are to the global economy. Recently, Mirametrix, a software company that offers cutting-edge artificial intelligence solutions for computer vision applications, was purchased by Lattice Semiconductor Corporation in an all-cash deal. Lattice Semiconductor Corporation had interests owned by 19 hedge funds at the end of the third quarter of 2021, down from 24 at the end of the second quarter, with positions totaling $306 million. Lattice Semiconductor Corporation was one of the companies featured by asset management company Artisan Partners Limited Partnership in its Q4 2020 investor letter. The fund said the following: in addition to providing FPGA chips to data centers and new 5G infrastructure, particularly compelling opportunities given these end markets, and will likely continue benefiting from strong secular tailwinds, we believe the company is well positioned to tap into long-power reprogrammable chips, as well as industrial and automotive end markets. We believe the company is well positioned to tap into low-power reprogrammable chips as well as industrial and automotive end markets. Number 9. Brookfield Renewable Partners LP, NYSE BEP. Owner and operator of renewable energy producing plants in Brookfield Renewable Partners LP, the corporation is anticipated to gain as the world switches in the next years from fossil fuels to sustainable energy sources. Brookfield Renewable Partners LP shares was recently raised by J.P. Morgan analyst Mark Strauss from neutral to overweight with a $46 price objective, citing the company as the best in class in the ownership of renewable projects. With 72,525 shares worth more than $2.6 million, the New York-based investment company Select Equity Group is one of the largest shareholders in Brookfield Renewable Partners LP. Asset management company ClearBridge Investments featured a few equities in its Q1 2021 investor letter, and Brookfield Renewable Partners LP was among them. The fund said the following: Its development pipeline stands at 18,000 megawatts, providing the confidence the company can meet its targeted double-digit cash flow growth through 2025. Shares moderated amid expectations of rising bond yields and a cool-off on the green trade. Number 10. Sibanye Stillwater Limited, NYSE SBSW. Sibanye Stillwater Limited is a company that mines for precious metals. The business is anticipated to expand rapidly as demand for EVs, electronic gadgets, and other metal-related items increases, along with the price of precious metals. Abhi Agarwal, an analyst with Deutsche Bank, recently began covering the stock with a buy rating and a $19 price target, stating that the company was in a strong position to produce enticing free cash flows in the next years. Late in October 21, Sibanye Stillwater Limited said that it will pay more than $1 billion to acquire two Brazilian mines, the Santa Rita nickel mine and the Serrote copper mine. Hedge funds are investing in Sibanye Stillwater Limited, along with Apple Inc., Berkshire Hathaway Inc., and NVIDIA Corporation. Asset management company Desert Lion Capital highlighted a few stocks in its Q1 2021 investor letter, Sibanye Stillwater Limited being one of them. The fund said the following: "The company is debt-free and generating heaps of cash. The valuation is cheap. At current metal prices, Sibanye is trading at about 5 times after-tax cash profits. Sibanye is effectively a call option on a potential commodity supercycle. In the meantime, the value of our option is unlikely to deteriorate as we are rewarded with healthy dividend flows. So let us know in the comments what are your thoughts on this, and if you found this video interesting, please hit the like button."